All right, guys, let's go ahead and review the NASDAQ 100. So, where we kind of lie right now, the bulls, they don't have any steam. At one point in time, we were up, trading around yesterday's high wick over our five simple moving average here on the daily time frame, closer to 18,400. And you can see where we sold off to, where we're currently at here. Market just closed. We're trading at 17,200. We sold off about 1,000 points, 800 points or so. That's two back-to-back days being rejected at the 5-day moving average. And what I want to kind of emphasize is, in my opinion, the selling is not over. Okay, it's definitely not over. You're definitely able to catch some bigger moves to the upside when you do get them, because quite frankly, right now the volatility in the range is so huge. You're looking at 100-point candles on a 5-minute time frame. You're looking at 50, 60, 70-point candles on a 1-minute time frame. So if you can get in there and you can definitely find a situation where you can find an opportunity to go long, sure, you're going to make money. But your trends are definitely still to the downside. Now, what I don't like about today's candlestick is, if you kind of look at it, setting up a little bit of a hammer candle. And if you look at the lows here of 16,460, I want to bring up a weekly time frame, because I want to show you guys exactly where we could be headed on this weekly time frame. Okay, so if we look at the weekly candlestick, we obviously had the big spike yesterday, we had the big spike today, and then we had the sell-off. We're in the middle of a range. Okay, we're in the middle of a big range, and when you wonder why the volatility is so big, sure, tariffs, this, that, the other, fine, I get it. But when you're trading in a range, okay, from 18,400 all the way down here to 15,800, I mean, you're talking about a 3,000 point range. So would it shock anyone to see 500 point, 1,000 point swings intraday? Probably not, because when the market is trying to figure out where it's pricing itself in at, what its next move is going to be, and you're in a 3,000 point range between supply and demand, you're going to get those big swings up and down, okay, until we figure out if we're going to go higher or we're going to continue to come lower. Now, personally, my opinion, I think we're going to get down into something that's got a 16,000 on it. And, worst case scenario, 15,700 would be that ultimate stop. Not to say that we're not going any lower, but let me kind of make something clear. If we do get down into this weekly 200-day moving average, the weekly 200 SMA, it's probably going to be a good spot to start loading up long term. It's probably going to be a good spot for the market to have a very aggressive bounce where you see 1,000, 2,000, 3,000 point rally, even if we're going to continue throughout 2025 selling off, which I don't think so. I think we're coming closer to the end here, because what it's looking like is that they have a plan. Okay, when I say they, I mean the administration. I mean whoever they is, right? Whoever is causing the selling, right? They have a plan, and the fashion that we're coming down into the 200-day moving average is very, very quickly. Like, normally in a normal, I guess I should say, no bear market is ever normal. But in a normal bear market, you have, a couple days of red, followed by a week of green and consolidation, followed by a big day down, followed by some more consolidation and maybe a dead cat bounce. It's a longer, drawn out process. Okay. And when it's a longer, drawn out process, it takes a long time. Like, typical bear markets take anywhere between 12 to 15 months to kind of digest. Now, the reason why this is not seeming like a normal bear market, it reminds me a little bit more of the C19 crash, the bear market, the 30 to 35% drop that we had during the pandemic, and then the automatic V-shaped recovery, is because of the speed and the nature and manner of how fast we're going down with such a big range. It's like they've got to get us to a certain point so we can cut rates. They've got to get us to a certain point before all these other countries play ball and say, hey, they throw in the towel and say no mas. Like, that's it, right? Like, I don't want any more. I'm throwing the baby out with the bathwater. I'm done. I don't want nothing to do with my long-term portfolio. I'm sold out of my positions. And then all of a sudden, out of nowhere, you're looking at the market in a matter of a week to 2 weeks time up 3,000, 4,000 points. So With that being said, I'm still going to lean more into these shorts. And the way that I'm doing it right now, again, because I trade prop firms, I'm on a $50,000 account across the board with all the firms. I've only got between $2,000 and $3,000 worth of drawdown. Okay, as you know, $22,000 and $2,500 worth of drawdown. It's not that much drawdown. I don't have a lot of margin for error if I'm putting on 1, 2, 3 mini contracts. I mean, I could blink my eye and literally the accounts could be wiped out. I've already lost 2 evaluations, which again, I treat evaluations as, you know, they come, they go. But just trying to get my feel and my sense of direction here in the market, I'm trying out on evaluations, different position sizing, right? I mean, I'm putting on 2 or 3 contracts, minis, and I'm trying to see, can I control it? I can't. I'm trying to put on 1 mini contract. Great. It's good when it goes in my favor, 25, 35, 45 points. But I'm also in those situations where I get into the trade and it goes up so fast and down so fast. Now I'm down 40, 50, 60 points. And it's like, okay, I can't really control that, because at the end of the day, I'm not going to really have that many trades that I'm going to be able to lose before I lose the whole account, if I have multiple trades at all. So with that being said, I'm right now I'm trading micros, and I'm trading between, to be honest, between 1 and 3 micros, with the sweet spot soft landing around 2 micros. And I'm not really looking for the quick 5 or 10 point take profits, and I don't really have that 10 to 15 point stop loss. Right now, I'm opened way up. I'm playing the chart more from a top-down perspective, where I'm using bigger key levels based on the 1 hour chart or even on the 5-minute chart, looking at some of these bigger supply and demand zones. And I'm opening up this stop loss 35, 45, 55 points to try to get 50, 60, 70 points also. So I'm trying to run as close to a 1-to-1 as possible. Here's what I'm also doing as well. What I'm also doing as well is, if I do catch a trade and I make 25, 35, 40 points, you know, and I'm trading 2 or 3 micros and I'm up 200, 250, 300, 180, I'm calling it quits. I've got to walk away. I'm doing my damnedest right now to hold these trades longer, because in this current environment, although the ranges are whipsawing back and forth, we are getting continuation. So if you can build into your position, maybe even if you have the dollar cost average in, or, you know, kind of really wait for some good validation that the move in the trend, the short-term trend, is in motion, try to hold your position as long as you can, okay? Because the less trades you're taking in this environment and the longer you're holding that winning position, the less stress you're going to have throughout the week, because you might be able to clip off a 100-point winner. Like, for example, today there was an instance, and I'm going to pull up the 5-minute chart. Today there was an example where there was a bounce, okay, and it was damn near 100 points on a 5-minute time frame. Where the hell was it at? Right here. So this candle right here, like, we were selling off, selling off, selling off. I was just participating in this short. I got in through the loss of the 200-day moving average. I kind of just sold out here in this move again. I wish I could still bring myself to hold, but I mean, look at this. We come into the 200-day moving average on a 5-minute time frame. We get a little bit of a bounce. You know, clearly this is a downtrend. So I want to fire away a short position somewhere here below this 200, okay? And this range that I'm giving up is going to be about 50, 60, 70 points. Now, if I hold it, well, the next candle proceeds to be 150 points. So for me, and again, for a lot of us, we're not used to seeing ranges this big. So for me, something like a 100-point move would be something that would take 2-3 hours normally, right? Or let's call it an hour to 2 hours normally. We're seeing it in 5 to 10 minutes. So although I am holding for 40, 50, 60 points trading these micros, I'm missing out on hundreds of points, and I'm doing my best to try to hold it a little bit longer. So right now I'm kind of working with, you know, different areas of supply and demand to kind of just gain that confidence, because truly here, this short position, you know, was a hold. You could have caught at least 100 points and walked away on the day. But going back to my point, once we kind of sold off here, we put in this bottom, you know, this is a little bit of a doji slash, you know, maybe it could be looked at as just a pause candle for more room down, which it was later. You get an immediate reaction. You get this break back over your 5 and 10-day moving average. But the break from the 5 to the 10-day moving average is, you know, it's damn near 40, 50, 60 points, right? So this whole range here is 144 points. So again, you can find these positions like in some scenario like this. Let's say, we're selling off, and then we fail to make a new low. As soon as you see us start to bounce like this and reclaim this 5 SMA, you can just put a hard stop loss below that previous swing low and just ride it. I mean, and do your best to try to ride this into the next macro area on your time frame, whatever time frame that you're trading, into that supply zone, right? So from here to here is a big move. And if you look at it, you're talking about getting over this 10 SMA prices of 17,620 into your next area of resistance, which is your 20 SMA at around 17,735. So this is like over 100-point move here, guys. So there's areas of opportunity here. Again, something else that you can sit and wait for. You could still just stay short, allow it to bounce, ignore the long, and then allow this to lose, right here, allow it to lose that low of day again. Okay. And if it loses that low of day, well, where are you going to manage your stop loss? We got to think about the risk first. So if we're going to take a position through here, okay, now let me just draw a static line here. If we're going to take a short position just playing the continuation, well, we're going to be getting in here, but I want you to notice that the previous 1 minute candle, or excuse me, 5 minute candle was a 200-point range candle to the downside. We're definitely not going to give ourselves 200 points, but I got to start thinking, where does this short position become invalid? And this short position comes invalid if we reclaim this supply, and this supply, which is your 20 SMA. And from the entry price of around 485 to around 587, I mean, is 100 points. So realistically speaking, I mean, am I telling you to go into every trade with a 100-point stop loss? No. But I mean, if you normally are risking $200, $300, $400 and you're trading 1 or 2 minis and you're giving up 10 to 15 points, you're just not going to be able to survive in this type of environment unless the move just automatically goes in your favor from the jump. Even if you were giving yourself, 60, 70 points worth of wiggle room here in trading 2 micro contracts, sure, you're giving up $250, but you're also looking for at least $250, $300, $400, $500 to the downside. So you're in this type of environment, guys, we are trying to look for a 1-to-1 plus. Like, if we can get 2, 3 R's, it's going to be beautiful. Again, because of the volatility so extreme. Now, I don't believe that the volatility is going to stay like this, but I do want to make a point. When we had the pandemic and the markets got all crazy, okay, and we had that big drop followed by the big reversal that actually hit all-time highs that year, the volatility in the range in the NASDAQ changed forever. Before that, if we were getting moves of 200-300 points, 2%, 2.5%, 3% in a day, before the pandemic, people would be jumping out of the 25th floor. Okay. We didn't see ranges like that on a day-to-day basis. The point I'm making right now is that we're looking at ranges of 4, 5%, 5%, 5.5% on the day. 1,000-point swings. Do I think that it's going to stay that way? No. But think about the situation we had in 2020, where we went from a range of, 50 to 150 points in a day to 250 to 300 points in a day. If we jump, okay, and we have ranges of 500 to 700 points in a day, swing high to low, you better get ready to start adjusting that trading style altogether to get in these moves and actually hold them for longer and practice discipline. And what that's going to entail is not for you to be throwing on big size where you're trading mini contracts, but it's actually to size down a little bit until you can grow that account balance. Now, if you're trading a 250K account, a 300K account where you have $4,000, $5,000, $6,000 worth of drawdown, you can probably trade a mini or two, but you're going to have to probably run $1,000 to $1,000 stop loss, I would say. Okay. So however that's going to work for you, that might be 20, 30 points that you can run, 35 points that you can run as a stop loss. But if you don't trade big accounts, or you don't have a $50,000 account that you've run the balance up to 10,000, where you've got an additional $5,000, $6,000 worth of drawdown, I don't think right now you can trade minis at all. Okay. That's just my opinion. I think you can do it. And I think if you get lucky and you are on the right side of the trade, you can build your cushion $2,000, $3,000, $4,000 to allow you to trade minis. But I think that if it goes wrong and you take 2 or 3 losing trades, you're going to be in a world shitstorm of hurt, okay? And you're just going to constantly be buying new accounts. What I suggest right now is for everyone to try to hold these moves a little bit longer, open up the stop loss, if not double or triple the amount of normally. So if normally you had a 10-point stop loss, you probably need to be closer to 25, 35 points. If you were normally using a 25-point stop loss for your particular strategy, you probably need to be closer to 50, 60, 70 points right now in these current conditions. If you want to practice trading smaller size and opening up that stop loss and take profit, I definitely recommend do not do it on your funded accounts. Go out there and buy some evaluations. Apex, daytraders.com, Top One Funding, Top One Futures. You can get a discount with those guys using my code DAnthony. Top One, you can use the link down in the description box below. But with day traders and Apex, you can use code DAnthony. You're going to get the best available discount that they're currently offering. That's what I would recommend. Again, you can trade with Take Profit. You can trade with Tradeify. Those are all great firms as well. My Funded Futures, those are all great firms as well. I just don't have an affiliate code with them, so I can't plug them. But they're all great firms. Whatever firm of your choice that you want to trade, I would definitely recommend to go out there and get some evaluations and start practicing, because God forbid if things don't change soon, you're going to have a tough time here. And we need to be reacting in real time to the facts that are going on in front of our faces. I hope you guys enjoyed this video. If you did, make sure to like, comment, and subscribe. I'll see all of you guys on the next one. And again, stay safe, guys.